Lucid Motors recently disclosed financial results for the fourth quarter and fiscal year 2021, as well as a forecast for fiscal year 2022. The startup has slashed its manufacturing projections for this year, citing supply chain difficulties. The business reported that it was reducing its manufacturing estimates from the initial projection of 20,000 automobiles to 12,000 to 14,000 vehicles. When it comes to its flagship Air sedan, the carmaker only delivered 125 units in 2021. It has already exceeded that figure in 2022. But what caused Lucid not to produce more than 125 sedans in the last quarter? What have they done to make sure that doesn't happen again? And how will the intended downsize affect the business's valuation? All this is to come, so stay tuned. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. The last couple of years, when one of the most plentiful and crucial chemicals in electric cars experienced demand challenges, it served as a reminder that supply chain problems are becoming deeper and the value chain is becoming even more costly. For modern electric vehicles to function properly, they must be connected in such a way that a manufacturer can deliver critical software updates to the vehicle's firmware, including the braking system and powertrain, without the driver having to do anything. The more advanced the electric vehicle, like the Lucid Air or Tesla models, the greater the number of semiconductors required. The average number of semiconductor components included in an electric vehicle has risen significantly in recent years. Options such as blind spot detectors and backup cameras became more common in these vehicles, and as a factor, the need for semiconductors increased, as did the demand for the precious metals that make up those chips. Due to the obvious growing popularity of autonomous vehicles, the market was projected to see an increase in the need for semiconductors. Likewise, when more electric cars were added to fleets by manufacturers, the need for semiconductors was raised even more. Despite the epidemic, every major automobile manufacturer has worked to make more electric vehicles. For instance, BMW was pushing for electric cars to make up 15 to 25% of overall sales by 2025, while Honda was striving for 2/3 of its overall sales to be electric cars by 2030. Obviously, in light of the worldwide epidemic, such objectives are still a work in progress. But something else that also drove the demand for chipsets was the need for computers. That resulted in a lot of chip supplies that was supposed to be used in electric vehicles. In fact, the situation is still dire, to the point that China's electric car sector may be forced to temporarily suspend operations in 2022 due to a worldwide semiconductor shortage that would leave 1 million vehicles without critical components. That was the same issue that Lucid was experiencing. Every manufacturer was working hard to secure contracts with suppliers for their fleet of electric vehicles. However, in the smallest of terms, Lucid was subjected to its own kind of manufacturing hell, a phrase created by Tesla CEO Elon Musk when his company was experiencing problems with mass production of its fleet a number of years ago. But Lucid was also taking a toll from the outbreak. The epidemic, according to CEO Peter Rawlinson, meant that Lucid teams were unable to visit their suppliers in person to confirm that technical requirements and tooling were synchronized. Now the supplier quality teams have been able to solve many of these concerns as travel has been opened again. But that was an issue back then. In his statement, Rawlinson noted that these difficulties were affecting only a small number of their around 250 suppliers, and that they were not hurting crucial single-source or dual-source components like semiconductors or batteries. Instead, it's been basic commodities like glass and carpets, and they've had to adjust by modifying their specs or even switching suppliers to be competitive. In other words, the Californian firm was not threatened by the semiconductor scarcity that was plaguing the whole industry. Instead, the business was damaged by the lockdowns during COVID. Therefore, several vehicle components were delayed throughout the manufacturing process. Perhaps that was the reason why we were seeing cars in the factory parking lot moving about and waiting for the parts to be received. And that is what likely caused the missed target for the startup. There is no doubt that Lucid has a good product and service, and there appears to be a healthy demand from customers, with reservations growing to over 25,000. The challenge is figuring out how to navigate the supply chain and the production issues they're currently experiencing as they ramp up manufacturing, and that too in the unfriendly environment of the epidemic. This leads us to the future target, which is how the company intends to deal with these challenges in the future. They may be able to handle the basic component shortage, but what about the semiconductors, given that they'll be starting mass production? For that reason, they've hired what looks like to be their own logistics team in Taiwan. Over half of the world's semiconductors are produced in Taiwan alone, so Lucid has to get a piece of that. Lucid may have gotten off to an impressive start in 2021, but the same cannot be said for this year. As the carmaker announced its fourth quarter results, it reported that it had generated $26.4 million in income this year, with $21.3 million generated from deliveries to customers of more than 300 Lucid Air cars from an initial production run of more than 400 units. But the carmaker is already predicting a big drop in production for 2022, citing the same things we've heard about in the industry over the last 2 years as the reason. A major warning flag. This piece of information was the catalyst for the shares of Lucid Motors to drop. Having said that, since pre-orders are still active, it's predicted that the price will decrease only temporarily. Lucid Motors expects around 12,000 to 14,000 electric vehicles to depart its Arizona manufacturing plant in 2022, which is fewer than the 20,000, but according to the analysts, this revised production forecast is not a reason to sell the stock. Lucid Motors' pre-order status suggests that consumer demand for the Lucid Air EV is high and rising. A strong product that customers love is a considerably more accurate predictor of a company's long-term success than any other method. The company, even if it takes a bit longer to manufacture and deliver its electric cars to clients, will be able to benefit from the latest trend of excitement. But what do you say? Do you think Lucid will be able to handle the industry dynamic this time? Let us know what you think in the comments section down below. Mario Figueroa says Russia's and China's business environment is gonna make investors switch to more secure stocks, such as Lucid, in the near future. I think he's making this reference since Lucid, as a manufacturer, is not currently doing business in these nations. So, it'll be safe from the negative effect of sanctions on businesses working in these regions. That should wrap things up for today. Keep in mind that subscribing's still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.